All right, cool. So this is the market hangout. We're talking breaking down levels. So uh, want to try and go through and make sure that this is kind of recorded so that then people have better insight and then can always go back through and refer to this when um, breaking down levels, looking at different things, and then potentially formulating trading plans around that sort of thing. Now, one thing that I think is always good is either to look at longer term time frames and then break things down from there. For this specifically, we'll probably go through and just keep it really, really simple, breaking things down with fibs just coming down and looking at the prior market cycle high to the current bear market bottom. And then since from there, now we've gone through and we've identified some very key levels for here. Okay, so this is one way. From there, you can go through and break things down even further, and really kind of get into now you're talking about a range within a range. This being basically this range all through here. Okay, so now that we've kind of gone through and we've talked a little bit about that specifically, now I want to talk about where we can go through and potentially break price down from what it is currently respecting. So if we go through and we're locally looking at, there's my frog. Say hi, frog. Okay, so if we're going through and we're specifically looking at price action over a year that we've gone through and been in now, basically just this entire year, we can go through and break down just this year's range. This isn't talking about anything really too much from prior years. We're just talking about just this year. So this should incorporate everything on the 6-month candles, everything on the quarterly candles, and so on, because this encapsulates the entire year's worth of data. So, okay, from there, we'll go ahead and zoom in to something on the daily. And right off the bat, we can see, okay, is price respecting these? Well, right off the bat, we can see that from the time that the year had gone through and opened, we got rejected from the quarter. Obviously, this being the low, this is where we found support, and price eventually went through and gravitated up towards the top. Price oscillated quite frequently through here, so yes, we could argue that this is a valid range. Okay, with that being said, where that kind of currently brings us, obviously price being down in this lower range that we've gone through and established, so this would be between the lower quarter and the midpoint. So price being below the midpoint, this is a big key area. Now, where did price end up coming back down through and wicking towards? So again, we can go through, and if we're talking about shorter term trades, all that kind of stuff, we can break things down way smoother from here. We'll try and be as precise as we can with that for again, being precise, making sure it's accurate. Where did price end up coming down to? Right into the quarter point. So that in and of itself, this is why I love this tool. Absolutely awesome. Math is hard to deceive. Math, it doesn't lie to you. But yeah, even that, when we go through and we're looking at some of the different extensions, we can see how price was, even when we were in the higher trading range, price was respecting some of these levels from here. So this even just looking at the yearly time frame, this is absolutely valid, absolutely great to go through and kind of break things down from there. So with that, what we'll do is we will now go ahead and mark out some of these levels, because now we know they are indeed significant. So we'll go ahead and get rid of that, because now we officially have them on the chart. So we'll come in here and just say this was the year high. This was the year quarter. We then have the year mid. And another year quarter. Okay. Oh, I guess I didn't mark out the year low, but that's okay. That's right there. We know that that's that one. Okay. So now, once we get into something like this would be where, depending on where price is, because obviously this covers a year's worth of action, year's worth of just what's all going on. This would be where we can look to see, where price is currently trading, which range is price currently in, and what is essentially all happening. Oh, I didn't mean to change the color of the text. I meant to. There we go. There we go. I wanted the mid to be yellow so then it's easy to distinguish. Now, for me, in my mind, generally the extremities of the range, meaning we have our highs and we have our lows. So this is obviously the broader, more important levels when it comes to what we're looking at over the course of the year. So we have our highs and we have our lows. These are our two most critical data points. Outside of that, the mid is then the second most important levels that we want to go through and we pay attention to. Why? Because the mid is essentially what controls whether we are trading in the upper range or if we are trading in potentially the lower range. So with that being said, price is currently below the mid of the year-long range. That in and of itself is very, very significant, meaning that if price cannot go through and get back above this pivotal level, currently with it being on Binance, that is at $56,208. If price cannot go back through and gain acceptance above this level, and we continue to maintain resistance through here, I think it's only a matter of time before we essentially revisit some of these lower prices that we even just went through and we recently saw. Again, we can go through and we can break this level down even more and see, okay, we respected both the midpoint and we respected this quarter point, meaning that all of this is still extremely, extremely valid. So in this instance, one thing that I would really kind of want to watch for would be, okay, let's say, actually, you know what, let's go ahead and zoom in. We use something like the 4 hour, just so then, again, we can we can see how price essentially is unfolding. Now we know that this was really close to the quarter, which probably means that where this other candle went through and probably closed was really close to the mid. Look at that. Really close to it. So, okay. So right off the bat, we're just going to, just for simplicity's sake, we're going to just use the midpoint of this range for here. So if price is unable to go through and reclaim back up above this mid level here, the larger mid level. You know what? Let me make this one bold. There. It's fat. It's important. You got to pay attention to it. So, okay. If price cannot go through and gain acceptance above here, let's say, yeah, okay, we see some price action kind of be a little dodgy. For the most part, it's not looking good. We're not able to confidently get above here. Maybe we see some price action, something along these lines. This would be where I would actually be looking for a short position. As soon as we would go through and kind of establish price action below kind of a low, this becomes a deviation on a larger level that is much more important, where on a short-term play, I would target the mid and I would target the extremity of the range. Now, if you wanted to break this up further, and let's just say you wanted to play it in quarters, and say this would be target 1, target 2, target 3, absolutely you can go through and do something like that. Now, on the flip side, because I don't want to just be bearish, but let's say price is able to go through and flip and get back on top of the mid level, of the midpoint of this broader yearly range, then at that point in time, this becomes a really big, broad deviation. The same way that we had deviated over here, price surged towards 70K. We deviate here, it would make a lot of sense for price to potentially come in and probably tag the midpoint and maybe even get in towards the quarter point of this overall range. Now again, we can go through just for simplicity. We'll essentially come in and break this down. How good was my eyeball? Roughly close, being at 60,649. This would be a target towards the upside. So again, when we're looking for triggers for different things, again, let me actually kind of draw out what I mean, because I want people to kind of use this as a learning thing. I do have other videos where I kind of break this down, probably even better than what I'm doing in this one, but I think that it's always good reminders, good refresher courses. So in this instance, let's say, all right, price comes through and it gains acceptance. We start seeing this come and hold as support. Okay. Now, if we're just coming off of a deviation, now this one is, obviously much deeper. So in this instance, let me just kind of draw something out like this, saying, all right, yep, hey, look, that was the deviation. Here we go. Say we had just come down from a leg, and so we had our deviation. Now we're starting to hold this as support, and price is just kind of starting to flirt with this. You could theoretically take an aggressive entry, and your stops would be just below the local low that was gone through and established upon that deviation. Generally, because what that would mean is that if price ended up coming back below that critical level and taking out this area, well, then at that point in time, you're talking about trend continuation. You're no longer talking about, potentially just, oh, hey, we came into a macro level of support. We should potentially go through and hold this. No, you're officially talking into trend continuation territory. Whereas locally, if we go through and we're flipping this into support, yes, you could argue an aggressive entry and, try and time things during little pullbacks, all of that. But for me, one of the things I'd want to see is that at this point in time, once we go through and we start back testing, one of these key levels, one of these key areas, we'll see a high that goes through and gets established during that time. For me, I want to see price come up and back test that level specifically. I want to see that flip into support. Now, at that point in time, why is that? Because at that point, this next low that we would have gone through and seen, I'm 9 times out of 10. This is a much tighter invalidation than trying to go through and take an aggressive entry on a deviation, meaning that if I get stopped out, my loss would be less than if I took an aggressive entry and I get stopped out here. Now, sometimes aggressive entries are totally okay because they're tight invalidations in the first place. This would be kind of, honestly, this one right here, this would probably be a decent one in and of itself. That, yes, we did come through here. We had a quick deviation play, but again, we saw, kind of another move lower. This, upon acceptance, as soon as we started seeing price action really kind of build structure up through here, this would be a pretty tight level overall. You're not talking about a crazy drawdown, basically from this, geez, oh man, the magnet. Basically from where you'd potentially look at an aggressive entry to this low. So there you're talking 3.23%, not too bad, especially if you're not using too crazy of a heavy leverage or anything along those lines. But again, that is kind of the way that I look at things for both longs and shorts. How I try to go through and break down some different levels, and how I try and identify them from there. But outside of this, sometimes going back through and looking at things in the most simplest form is way easier, because this one, I've got this all broken down into all kinds of different things, both referencing the prior cycle, the Q3 open, well, I'm here specifically, I'm looking at Q1, but that is basically all of the price action that we've seen this entire year. And then outside of that, looking at kind of clusters where price action, had kind of gone through and formed, and identifying those in boxes. And in this instance, um, yeah, we saw a price come through, deviate that cluster, and see, price action reverse back towards the upside. But outside of that, I think that it's important to go through and identify some of those levels. I lost the. I think it was on Binance. Yeah, I think it was on Binance. I think it's important to go through and just identify some of these levels, because at that point in time you'll be able to kind of gain potentially a little bit of a deeper understanding that, regardless of what price does, whether it goes up, down, sideways, it really doesn't matter. You can sit there and kind of formulate and look at some of the options that are kind of in front of you, and that, hey, if price ends up potentially not holding at one of these key levels, or potentially flips, any of these big key levels into support after going through and breaking above it, where would price go through and potentially gravitate towards? Now, with that being said, it works the exact same way when, we go through and we break out of a range. Say that this is a brand new coin and we've never looked at it before, and it just went through and just launched, and we're going through and breaking it down and all this stuff, and let's just say maybe it's only got like 3-4 months worth of price action. For the most part, the market looks heavy. The most part, the market looks healthy. Now, one of the things you can do, we can take the entire broader range, and my magnet tool is screwing with me, but we can take the entire, portion of the range, and then look and have extensions both towards the upside and towards the downside, and get an idea as far as like, okay, hey, if we take out this low, and price really starts to go through and push down in through here, yes, we can break this down into levels from there, but we have a really big level at this point here. Same thing towards the upside. We'd have a really big level, the next quarter point, the quarter extension from where we're looking at, that, would be basically the larger goal, the larger target at play. And kind of play the larger target to larger target from one thing to the next. But the key in, especially on some of these shorter term trades, you would want to be taking profits in between, because at the end of the day, we don't 100% know if we would make it to the larger target at hand. So this is why I think it's important to use midpoints in different things. If you want to break it into quarters and then take profits, kind of along through there as well, you 100% can. Again, this works on gold, this works on Bitcoin, this works on the S&P, this works on everything that can be tradable. And I think that once you get to the point where you can go through and either identify something by looking at longer term time frames, breaking it down by either what we had talked about even just earlier, by a cycle, or even just looking at the price action that's gone through and unfolded for the year that you are currently in. All of those things can be extremely valid in how you go through and break things down. For me, I like looking at the longer term time frames. I like looking at the quarterly time frames to be able to just very easily identify some of the key, key levels to go through that I think at that point gives you a very solid starting point for breaking levels down from there. Now, obviously, we'll probably not talk about refining ranges too much in this video. I already have a video about that one specifically, and I'll try and maybe find that and get that posted for anyone that is potentially interested in that specifically. But again, kind of just want to use this as kind of a refresher, slash also talk a little bit about what, different ways, different things you can look for trade entries. And trying to look as well as targets kind of along the way. I think that that's overly important, absolutely important. But okay, I think outside of that, we've talked a little bit about Bitcoin, where things currently stand. What I would really want to see for price to either gain acceptance back above the midpoint, even just with where things are. I think that's one of the reasons it was actually really good to break it down with the current levels, because even on my other charts that I've had marked up for ages now, the midpoint here, whether you use the yearly, whatever, um, absolutely huge level. This is massively critical for Bitcoin. You need to see Bitcoin's price action get above here and hold in order for us to have basically a bullish rest of the week, maybe bullish rest of the next few weeks. If price cannot reclaim back above here, again, this is the midpoint of the entire year range. This would be absolutely critical that if we cannot get back above through here, then I would argue it's more than likely that the low that we went through and we put in this morning, this low probably gets smashed through.
What kind of time
And
frame
at
are you
that,
talking about?
what's that?
What kind of time frame are you talking about that it needs to be back above there?
I would give it the next I would give it the next 2 weeks. If it can't go through, and I mean we're not far off. Right now we're at 54,000 right now. So I would give it a little bit of time that, hey, we could go through and let me clean this up because I've got lines all over the place now. There it is. So yeah, what I'm specifically looking at for here would be that over the course of the next 2 weeks, I'd be okay if price kind of, comes through here, and for the most part, as long as it's not really gaining acceptance and really wicking down below through here, I'd give it a little bit of time, and that, maybe even locally, we even see, all right, hey, we came up, we put in this first initial high, and maybe, all right, yep, we come down a little bit, but maybe now we're taking out this other high, and we see price action, maybe something kind of along these lines. 100%. I could see that going through and kind of taking place. Wouldn't be extremely volatile or anything, but it would make sense. So as long as we're not taking out this low, and as long as potentially we are trying to form a series of higher highs, higher lows, then at that point in time, if we see something like that within the next 2 weeks, it could take, it could only take 2 or 3 days from now. But as long as we would start to see price action gain acceptance above this level, above this critical level, then I think at that point in time, yes, it would be a very bullish thing. Again, because this would be a larger deviation on a critical level that goes all the way back to macro timeframes, macro levels. Again, obviously, a deviation here, and we saw price surge back in towards 70K. Now, obviously, if we're talking about refining ranges and everything, maybe I'll just throw this little tidbit here.
When
Um,
you're looking at that, why would you be afraid of a back test between 38 and 42?
oh, I'm not afraid of it.
I mean, wouldn't that be more long-term bullish if it back tested
Oh,
38 to
yeah,
42?
no, I think it would be awesome. Um, I'm saying that I think a lot of people aren't prepared for that kind of situation. I'm saying that I don't think people understand that we can gain acceptance under here. And if that ends up going through and happening, 100%, we can come back through. We can test the yearly quarter. We can come through. Maybe we even come back in towards 40, 42. And who knows? Maybe we actually see a deviation of the yearly low and then reclaim and go up from there.
Be more bullish long-term?
I think at that point in time, yeah, it probably would be. This would be an absolutely massive back test. And if we saw something where it's like, yeah, hey, we're coming back in and infilling all of this inefficiency that we essentially saw through here, and then not only that, but we couldn't gain acceptance below, basically the yearly low, and we deviate it. Geez, oh man, yeah, that is a bullish setup. That
So
is a
I would
really bullish
think
setup.
like it's if it goes back up from here, yeah, great, but it still means it's coming back down.
Um, not not necessarily. So there is a few things that we do kind of have in front of us. One would be if price can go through and confidently hold, let me since we're not talking refining that here, if price can go back through and reclaim this, and let's just say yes, over the course of maybe even just into the end of this year, we just see it, maybe kind of go all over the place, but for the most part, we are showing strength back towards the upside. Okay, for me, it's not necessarily that we need to go lower. It's more so that whenever we come back up and we start testing basically the range highs and then obviously what is capping the range. Okay. Once we get to that point, this would be where what I would really want to see. I'd want to see price come in, put in a new all-time high. We then back test what we just went through and just did. Now, obviously, we then have a new high that we just went through and established. So let me.
So would that mean, like, in that range you're not trading? Is that correct?
Yeah, this area I am not trading. What I would then be waiting for is this specifically. Okay, for me to then go through and look to long into new uncharted territory, I'd want to see price get up above the new high that we just went through and established, and then back test and hold. Okay. The reason for that is because as soon as we then start showing, hey, we are entering into um, uncharted territory, and not only that, but we are flipping the new high that we just went through and made into support. You could take an aggressive entry right here for a long with stops, at breaking inside, basically maybe just inside whatever the trading range was. Because if price comes back in through here, again, this then becomes a broader deviation, and you'd look for short setups targeting the other side of the range. But when we're talking breakout plays, this is where you could argue an aggressive entry. You'd want to be quick to cut if we start to, come back down, and then maybe look for maybe a secondary back test, and then you could do the exact same entry, all that kind of stuff. But the big thing would be is that as soon as you then start to see price then go beyond that new high that just went through and happened, that would be where all the extension tools, everything that we just went through and we talked about, becomes massively critical, because that's really where you'd be able to, you know, have a game plan. Like, where would I want to take profits in on this long? Where would I want to go through and, hey, yeah, we're doing all this, it's going crazy, but where are you actually taking profits? And so that's where even just coming in and breaking things down by certain levels, you'd be able to say, okay, yup, hey, I took profits here at the 1.25. Whoops, I took profits here at the 1.25. I took profits at the 2. Yeah, hey, we back tested, this larger breakout. Maybe I'm even going to go through and scale or add to my longs and everything as long as this level holds. So yeah, maybe you took profits here, you took profits here. Now that things have come back down through, and as long as they're continuing to hold through here, you could look at this and be like, hey, this is maybe just a higher low formation here. Let me maybe add to my longs as long as that continues to hold. Maybe you even, at that point, you tighten your stop loss to be break even at that point in time, meaning that if prices were to reverse, maybe you get stopped out. But if that holds and you added to your longs, bam, now you're talking compounding your trading, and exponentially growing your account from there. So that in and of itself would be huge too. But yeah, so outside of going through and breaking down ranges, we can use the exact same tool to go through and find extensions from those ranges. But again, the key thing, the most important thing here is identifying the larger levels at play. What are the key levels that you want to be pulling from? Now, again, I've talked just to kind of highlight this little bit, and then I'll stop the recording just so then it doesn't go too much longer. And we'll chat maybe just a few more minutes, but identifying the key levels, whether that is you are looking at a longer term time frame and you are specifically looking at something like a year a yearly time frame, a quarterly time frame, a weekly time frame, or even a daily time frame, and breaking down levels. It all just depends on what your goal for that trading is. And then outside of that, if you are in price discovery both towards the upside and or towards the downside, that would be where you can use the extension of those tools in order to potentially get an idea as far as where you would, kind of formulate a game plan for, taking profits, both either long or short, or potentially if you're just looking for an area to accumulate and we're having a larger pullback, where would be kind of some of your targets? Where would you feel comfortable as long as prices would continue to hold in certain levels? So, all right, with that, I'll go ahead and wrap up this video. We'll talk a little bit more. I actually do need to get a drink of water, but all right, we'll wrap it up there. So, all right, thanks for watching. If you're watching back, and who knows, maybe we'll catch you on another one.